Good evening and welcome to the Strategy of the Week tutorial for May 31st, 2013. My name is Steve Chappell, the Director of Educational Services here at VectorVest. The seeds for tonight's Strategy of the Week presentation were planted with several other presentations earlier in the year dealing with cherry picking. You may remember presentations in February titled Cherry Picking with CI Up-and-Comers on February 8th and 15th respectively. These presentations, along with several others featured in the U.S. market, culminated with the announcement of a Cherry Pickers Challenge. The Cherry Pickers Challenge was issued by our founder and chairman, Dr. Bart DeLito, in the March 15th edition of the U.S. VectorVest Views, and this COLT 45 methodology is a result of that challenge. In fact, COLT 45 is a submission by one of our elite members, Mr. Kevin Moore, and we really valued his submission for the simplicity that it entails. You'll remember in that same March 15th VectorVest Views, Dr. DeLito said it really only takes three things to be an effective cherry picker. 1. The VectorVest system of stock analysis. 2. Powerful tools. And 3. A methodology that is easy to use. And so we know with VectorVest we have our system of stock analysis, we have powerful tools. It's the methodology that usually gives people fits. And so tonight we'll focus on the methodology and how it can be applied to the Canadian share markets. It all begins with a slight variation of our Midas Touch graph layout. If you watch our daily color guard report with any regularity for the US, you've seen us demonstrate the Midas Touch over and over again the first trading day of every week, where we analyze gold by using the Gold Bugs Index. So for those of you who have not had that benefit, let me give you a quick look. So here we are in VectorVest 7 US, and all that we've done is we've loaded up a graph of the HUI, which you can see here is the Gold Bugs Index. Now the Gold Bugs Index tends to be extraordinarily volatile, so we needed a timing arrangement that would really smooth that volatility out and look at the longer term trends or the big picture as far as movement is concerned. And so you may say, wow, that graph looks a little funny to me. Well, let's take a look at what we've done. Over on the right in our graph control panel, all that I've done here is at the top there's a graph layout section. And in the graph layout section, you can simply open it up as we've done and then select the Midas Touch layout. Now you can gather already, I hope, that Midas Touch is appropriately named and that we're analyzing gold. But as we'll find out here in just moments, it works extraordinarily well for shares or stocks. Let's first discuss the layout. So I'll minimize the panel. And on the graph we have a couple of moving averages on stop. Now remember, our stop is already a moving average. It's a 13-week adjusted moving average based upon the fundamentals of the company. In this case, the 13-week adjusted moving average as it applies to the HUI, or the Gold Bugs Index. And so we've double smoothed it with a couple of moving averages, the red line being a 65-day and the green line being a 10. And we just use those moving averages as you ordinarily would. When the short term or 10 crosses below the 65, for example, that's a bearish indication. Now on the bottom we've taken another proprietary indicator called relative timing, which deals with the short-term price direction, and placed a moving average on it as well. And in this case it's a 40-day simple moving average. So in order to get a signal with this timing layout, both moving averages and the relative timing have to back each other up. So for a bear call, as we had here on December the 18th, 2012, you'll notice that the 40-day moving average of RT has crossed below 1 as is confirming the bearish arrangement of the moving averages on stop. And boy, what a wonderful call on gold that was. And so the last bullish indication that we had on gold would have been right back here on August the 28th of 2012, where the short-term moving average on stop crossed above the long-term, and the RT confirmed it because it's above a value of 1. Now Mr. Moore puts a slight twist on this arrangement, and let's move back into the PowerPoint so I can discuss. COLT 45 is named because it's an acronym for character of line trends. Ultimately, we want to favor stocks whose moving average lines are moving bottom left to top right in a smooth 45-degree angle. And while that's not always easy to find, it would be our preference. Also, Kevin has several other considerations. First, perhaps most importantly, the market must be in a confirmed up situation, in a confirmed up call. He uses the moving averages in the same way that we do. So 2 is the 10-day moving average of stop has to be above the 65, as we've already discussed, and the 40-day MA of RT must be greater than 1. The unique little spin comes in on number 4. All moving averages must be hitting 3-month highs. So we're only going to look at a 3-month window in time and analyze each of the moving averages to make sure each and every single one of the 3 is hitting a high on the right-hand edge of the screen. So let's jump over into the Canadian VectorVest 7 platform, and we'll take a look at a couple of very popular watch lists and see how powerful this technique can be, and once again, how easy it is. So here we go. Once at the home page for VectorVest 7 Canada, I'm simply going to go up to the Viewers tab. On the Viewers tab, we have a watch list section over on the left. And to begin things, let's just start out analyzing the TSX 60. So to get there, I'll come right down to the TSX folder, slide right on down to the TS60 watch list, and there we have it. Here's our results for May the 31st as of 3:03 p.m. Now remember, condition 1 is the market has to be in a confirmed up, which we are not at the current time in the Canadian market. So my first exercise is to take us back to the last confirmed up call. I simply click on the calendar. We'll dial back, see that we are in a confirmed down. And our last confirmed up was on January 10th of this year. So I'll click on the 10th and click OK. And so here we have the highest rated VST, value, safety, and timing stocks as of the close of business January 10th of this year. And so Canadian Pacific is right up there at the top. Now to apply the technique, it couldn't be any easier. Let me just push off the viewers pane to the left. I'm going to come right up here to where it says graph selected. And I'm simply going to change that to graph all. Once in the graphs themselves, I'll simply come over here to the right to the graph layout and change it to the Midas Touch. And here's the tricky part. I know for a lot of people, you have to remember that we went back to the January 10th up call of this year. And so we have to analyze the graphs as of that day. And so the easiest way to do that is to come right down to the bottom. We will change the dates by clicking on the calendar. I'll start with the end date. We'll go back to January 10 of this year. And we'll change the start date to October to give us that 3-month window. So I'll select the 10th and click on OK. And so here we have it. And what you're going to love about this technique is that it is so easy to do. Again, what are we looking for? We already have condition 1 in place, and that is that we're in a confirmed up call as of the right-hand edge of the screen, January 10th of this year. 2 is that the short-term moving average of stop has to be above the long-term moving average. Certainly that's the condition here. RT, the moving average, has to be above 1, and all the 3 moving averages must be hitting a 3-month high. All 3 of those conditions exist here for Canadian Pacific Railway. This is a candidate. This is a stock that we could purchase as of the open of business the following day. It's that simple. There's nothing else to it. Let's take a look at the next graph. So here we are with MG, and again, all 3 conditions exist. Short term on stop is above the long term, both hitting 3-month highs. Relative timing is above 1 and hitting a 3-month high. Let's go to the next one. Here we take a pass on MRU, and this is where I start my analysis visually with my eyes, so I want to train you that way. I look at the RT first because it's the most graphical, and I can clearly see it's not at a 3-month high, so you go to the next one. Not a 3-month high. Next one. Not at a 3-month high. Take a pass. We'll take a pass. Well, here we go. We're hitting a new 3-month high. It's above 1, but the moving averages are not hitting 3-month highs. They're bullish, but not hitting those highs. So we skip it. Let's go to the next one. Take a pass. There we go. SAP. We'll take that one. We'll take a pass on SLF. Enbridge. Perfect. Not quite with TELUS. Everything's starting to curl over. Royal Bank. Problem with RT. Looks good. BNS. Very close, but I don't like to see that short-term moving average up there, the green line, curling over. We take a pass. TRP. Looks great. Take a pass. Take a pass. Pass. Problem with RT. RT is not at a 3-month high. SJR.B looks great. Nope. Here we'll take a pass as the RT is flattened out. This one, is arguable. Some will take it, some won't. I could see cases for either, but we're going to make sure it's actually hitting the 3-month high on the very right-hand edge. And in this case, it's been there for a little bit. Same thing with BlackBerry. I think we'll wish we would have had that one, but that's okay. I'll apply the same condition to every stock. Let's go to the next one. BMO is a keeper. Here on BMO, let's check the RT just to be sure. So we'll click in here on the most recent date. The RT is at 1.1. I'm just going to slide it all the way back to the left. And we're at 1.09. So it ever so slightly squeaked out there. Let's go to the next one. No. 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 Keeper. No. 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 Nope. RT didn't quite cut it. No on the RT. No on the RT. No. 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 Close. No. 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 And so from here, hopefully you'll take my word. I've gone through every stock, and let me just go through and let's look at the performance of the stocks that we would have selected. I'll go ahead and close it out. We would have taken CP, MG, SAP, ENB, BAM.A, SJR, BMO, L, and TRP. And so what's the quickest way to check performance? We'll go right up and do quick test selected. And so of the 60 stocks on the TSX, as of the 10th of January this year, we would have favored 9 positions. If we held them all the way to now, we'd have 6 winners and 3 losers. But remember, we only want to be holding these in confirmed up situations. So I'm actually going to dial the end date back. We'll take it back to April the 2nd. I'll click on OK and rerun the test. Boy, what a difference it makes listening to the market, right? So in a confirmed down, we don't want to hold even these great stocks long. And that enables us to lock in a little over a 7% gain, where the market only went up 1/3 of a percentage point, a little over. And so we're doing almost 7 times market performance. This gives us an annualized rate of return of 32% a year, where if the market would keep up the same pace, you're looking at about 1.5% return. Well outperforming the overall market. And how easy yet how effective and powerful is this technique? Folks, it's phenomenal. And so I said, well, let's take a look at another watch list. And so over on the left, we'll bring the viewers panel back out. We'll close up the TSX. We'll go into special watch lists, and let's look at WOW, Value, and Growth. And so in WOW, Value, and Growth, still on January 10th of 2013, I went through the same exercise. Here, I'm going to go ahead and display all. So we have 152 items. We're going to click Graph All. Tells us that our limit's 100. So we'll simply graph the top 100 items. You really only want to look at the top 100 by VST anyway, right? And so remember, one of the things Dr. Lito shared with us in the essay is we need the VectorVest system of stock analysis. So we're going to just focus on the top 100. And I'm not going to run you through all 100 graphs, but I do want to get you focused in on this technique. So remember, when we graph them, again, I still have to go back to that date if I'm looking historically to validate the technique or the methodology. On a current basis, if I'm looking for stocks today, I leave it right where it is. But since we're looking back to prove efficacy, we'll go back to January the 10th again. We'll also bring in our October 10 date, so we have our 3-month window. And on West Fraser Timber, which has been a great stock, that's a keeper. All conditions exist. Next stock. Take a pass. Keeper. And so you get the idea. In the top 100 of this watch list, I found 20 positions that look like keepers to me. And so I'll go ahead and close this out. And I'm simply going to type those symbols across the top. This will also give you some exposure to them so that you can validate the test for yourselves. So WFT, comma, CP, comma, CCL.B, comma, MG. And so through the benefit of time-lapse photography, I've completed my list of 20, highlighted all of the stocks for us, and if I quick test the selected here, again we're going to see stunning performance. Here are the 20 stocks that I came up with. I'll go ahead and sort them by percent price change. You will notice that 16 of the positions would have worked out in our favor over that confirmed up period, with only 4 losing positions. CCL did the best at 34%, followed by IFP.A, RRX, MG, West Fraser Timber, and so forth down the list. The worst loser of the bunch was S, and we had some relatively minor losers here in IFC, LNF, and ADN. But boy, doesn't this look like a solid, easy technique to employ on your own. And so I leave you with that thought. To be a good, consistent cherry picker, you need the VectorVest system of stock analysis, and that's sorting by the VST, value, safety, and timing vector on any list of stocks that you're looking at. You need powerful tools. Watch lists, I think, certainly qualify as a powerful tool. You can also apply this technique with searches from the Unisearch directory. So certainly there are plenty of powerful tools at your disposal. And 3, you need something that's easy to do, a methodology that's easy to use, and I think this fits the bill perfectly. So I want to thank you for tuning in this week, and we'll see you again next week at VectorVest University.